Hello and welcome to our November webinar. We'll be talking about the Federal Historic Preservation Tax Credit, Federal Tax Credit 101, and we're so glad that you could be here with us today. My name is Mallory Bauer, and I have the privilege of serving as Michigan Historic Preservation Network's field representative. And so I will be giving you a brief orientation to the Zoom software. I know many of us are getting very familiar with this program, but I just want to take a moment to orient you to what will be happening today. And then I'm going to turn it over to Rob McKay, who is so kind to be here with us today to talk about the federal tax credit. So first of all, if you have any questions, we are collecting questions in the Q&A box. You can enter them throughout the presentation. And if it's a question that we need to ask immediately because it refers to a slide or clarification, we will interject. Otherwise, questions will be saved until the end of the presentation. The Q&A box is located in your toolbar, which will be at the bottom of your screen. If you don't see it, wiggle your mouse and it'll pop up from the bottom. Usually it disappears so you can have a better screen experience. And it's two little chat bubbles, like cartoon bubbles, and it says Q&A, and click into that, and that's where you'll type your questions. If we do discuss resources that we think you need a link to, we will throw that in the chat window. If you are not sure how to access the chat window or you missed it, we also include those resources in our follow-up email. So don't fret if you missed them in that chat box today. We will be having some polls at the beginning before I turn it over to Rob. So please take a moment to participate. They're mostly questions about who's in the audience, so we can make sure that we tailor the presentation to answer your questions. And it just helps Rob know who's here. So again, thank you so much, and I hope you enjoy this webinar. Briefly, before we get started, I do want to share our mission from the Michigan Historic Preservation Network. We advocate for Michigan's historic places that contribute to our economic vitality, sense of place, and connection to the past. We are a membership-driven and volunteer-driven organization, and we thank all of our members and volunteers. If you are not yet a member, I encourage you to join today and check out all that we offer at our website, which is www.mhpn.org. And I also want to acknowledge the generous supporters of these webinar series that we've been able to do since April to reach out and get information out into communities. This webinar and all of the webinars that we'll be doing monthly through September 2021 are supported in part from an award from the Michigan Council for Arts and Cultural Affairs and a grant from the Michigan Preservation Network, the Michigan Preservation Fund, apologies, from the Michigan Preservation Network and the National Trust for Historic Preservation. So thank you for your generous support of these activities. So I am going to stop sharing my screen, Rob, if you want to start sharing yours. And while we're waiting for that transition, I am going to do the polls before I forget, because I always forget. So our first question is, what is your role in a preservation project that might use tax credits? So select whichever best represents your role in a potential project and then hit submit. Awesome. We'll give everybody just a few more seconds. All right. So I'm going to end this poll and I'm going to share the results quickly. So we have a good mix of people here today, Rob. We have some owners, developers, a few consultants, a lot of people just interested, which is great, and community leaders. Awesome. And then we have one more poll. And in the second one, we're asking, have you participated in a tax credit project in the past? Just to gauge if there's a lot of experienced individuals on this webinar, or if there's a lot of people who are just being introduced to the program. Again, that's really helpful for us. Excellent, we have a lot of votes coming in. All right. I'm going to end this poll. Thank you all who participated, and share these results. So a lot of people here to learn, someone who's working on a project, and then a few. So that's great. Again, thanks for participating in the polls. So without further ado, I turn it over to Rob McKay. He is the historical architect for the Michigan State Historic Preservation Office, and we're so grateful to have him here today. So thank you, Rob.
Cool. First of all, can you hear me?
Yes.
All right. And second of all, I'm not getting the green line on my screen. Can you see the first slide?
I do see the first slide, yes.
Okay, cool. Just wanted to make sure technology was working in our favor.
No problem.
Okay, cool. Thanks, everybody. I appreciate your willingness to give up some of your Monday. I am going to kind of take the middle of the road approach on this presentation then based on sort of who's here. So if you do have immediate questions, something on the slides not making sense, if you would put that in the chat box, and then if you do have questions, also type them in the question and answer. I do want to try to make sure that I answer everybody's questions. So for those of you who don't know me, my name is Rob McKay. I'm the historic architect, one of 3 in the State Historic Preservation Office. I work primarily with the Federal Historic Preservation Tax Incentive Program, which is what we're going to talk about today. But then I also work with Section 106 process, what we call courtesy reviews, and then I'm the liaison to several federal and state agencies that have historic resources. So cover pretty wide area. It may seem like the tax credit information we're going to talk about is outdated because it's officially 2018 and beyond, but you have to remember that prior to 2017, we were working with information from the Tax Reform Act of 1986. So tax credit program doesn't change, or historically hasn't changed a great deal, but recent economic events and recent administrations have elected to adjust the way the program works a little bit. So what I'm going to do is sort of take you through what it takes to qualify to participate in the program, what the application process specifically is, ideally how it works, and then we'll talk about some resources, additional resources at the end of the presentation. So with that, let's get going here. Okay, there we go. You will notice a couple of places for those of you who have heard about the program before, this big blue new splat. Keep that in mind. Those are specifically pieces that change the way that the program has operated circa 2017. So important thing to know, the public law that we're operating under right now is number 11597, affectionately referred to as the Tax Reform or Jobs and Recoveries Act, I believe was what the administration called it. It includes the information about the federal 20% rehabilitation tax credit and talks about qualified rehabilitation expenditures. So that's where the legislation comes from that allows us to do the program. If you're an accountant or a lawyer and you'll like reading that stuff, it's worth a read. If you're the average person, I don't know that it makes a ton of sense. But this is the law that you want to make sure any legal professional you're working with or any accounting professional that you're working with is very familiar with, because it's sort of the mechanics behind the program. Things that the average person really needs to know about it. The idea is that the program encourages the rehabilitation of federally recognized historic properties. Federally recognized historic properties are officially those properties that are listed on the National Register. So there's a big connection between using the program and your property being listed either individually or as a contributing resource in a National Register listed district. big things to remember is that this is not a capped, competitive, or allocated program. However much tax credit business we can do in Michigan, and officially however much tax credit business we can do on the national level, we can fund in a year, because it's an earned credit. It's not a cash contribution or that sort of thing. The credits are frequently combined with other both credits and resources, and we'll talk about a couple of the things to be careful about that. And it can be used more than one time at a property. There's a lot of confusion about that. People think that because at some point in the past the property used the tax credits, they're not able to use the credits again today, which simply isn't true. The return rate on tax credit projects is approximately 20 years. And since I've been here for 22 years now, I'm actually beginning to see some of the very first projects that I reviewed come back for a second round of tax credit improvements. The credits are used by the owners, and they may be used, the same owner can use the credit more than once on a property. The same owner can use the credit on more than one property. So it's sort of there's a big mix and match there. So I have had the same owner come back for the same property. I've had the same owner do multiple properties. And so let's just keep that in mind. Just because you used it once on one property doesn't mean you can't ever use it again someplace else or even on that same property. So the characteristics of a rehabilitation, what does it take to qualify to be eligible to participate in the program? It has three things, and we'll talk about each of those. First of all, you have to be undertaking a certified rehabilitation. A certified rehabilitation has two components. It has to exceed the adjusted basis of the building, or $5,000, whichever is larger. Now, to calculate the adjusted basis for the building, you take your acquisition cost of the building, you subtract out the value of the land at the time that you acquired the property, you add in any capital improvements that you've made over time, and you subtract out your depreciation. So if you're looking at a building that you have owned for a substantial period of time, that number will tend to go down over time. So if, for example, I bought a piece of property that includes the building for $100,000. At the time that I bought the property, the assessor will help you prorate, figure out how much value is land, how much is building. Let's, for the sake of our discussion, say that the building was worth $90,000 of our $100,000 and the land was worth 10. To qualify to do a rehabilitation project, if I just bought the property, then I would have to spend $90,000 in eligible expenses, so capital costs, to qualify for the program. If, for example, then I had owned the building for a substantial period of time and had done some capital improvements, I'd add those in, and then I'd also take out my depreciation. And theoretically, if you have a property that you've had for a while, your accountant should actually be able to help you say, well, here's the basis for the building in today's market. But you would take whatever capital improvements you've made, add that into the $90,000, and then take your depreciation percentage. So if you're halfway through the depreciation cycle for this argument, we would assume then that your adjusted basis would be something like $45,000. So again, that lowers the amount of money you have to spend. So number one, that's how do we calculate substantial. Number two, a certified rehabilitation has to conform to the guidance in the Secretary of the Interior standards for rehabilitation. It's important to note that the standards for rehabilitation that the tax credit program uses are 36 CFR 67. They are technically not the same as the standards for rehabilitation that are included in the Secretary of the Interior's standards for the treatment of historic properties, which is a larger document that includes 4 treatment standards. The tax credit uses the standards as they are independently interpreted in an earlier bit of legislation. So it is important you get the right standards. There are subtle differences in them. They're not identical. And if you get into the process and you're having trouble figuring out which one you're looking at, email me, call me. I can make sure that you're looking at the right set of standards. So next question is, do you have a certified historic structure? This is a little bit easier. It involves either being able to demonstrate that a building is individually listed on the National Register of Historic Places. Again, those are typically buildings that anybody can look at. And I call them the Cadillacs. We'll all look at them and say, yep, that's a historic building. Get it, no problem. It's probably the least common way to gain access to the program, because there's far more properties that are listed on the National Register through the districting process. Because when you do a district, you're picking up multiple properties, hundreds sometimes, in a single nomination, as opposed to an individual nomination where I'm picking up one property at a time. The catch is that an individually listed building is automatically a certified historic structure, and we'll talk about this in part 2 a little bit. Part 1. So we don't have to do part 1 application for individually listed properties. For properties in a district, we do have to do part 1, because in that process, we validate that the building retains integrity and continues to contribute to the character of the district. As the districts get older, their character does tend to change. As buildings get older, their character will also tend to change. So in districting, we're trying to validate that the earlier assumptions were correct. And then there's a very narrow number of properties that will be able to qualify for the tax credits because their local unit of government has created a local historic district commission and districts that are construed to be equivalent to, but not officially listed on the National Register of Historic Places. This is a very small number of districts, but it can help. And I'm actually right now working with a community who has a local district that they want to get certified, rather than going through all of the process to create a new National Register district. It allows us to shortcut that process. But realistically, if you think you're in a certified local historic district, please contact me, because right now I'm the only person that actually has the whole list in Michigan. We're trying to figure out ways to share that, but we haven't gotten there yet. So, certified rehabilitation of or substantial rehabilitation of a certified historic structure. What qualifies is only depreciable and use properties. Okay. So if you have an owner-occupied residential property, that property is not eligible to participate in the tax credit program. It has to be an income-producing property. Income producing could be rental residential, which is why you see the long-term depreciation cycle, 27.5 years for that, or it could be traditional office, industrial, hotel, what we think of as normal commercial property, which has a 39-year depreciation cycle. And these are defined by the IRS. So we cross over between tax legislation, IRS regulations, NPS regulations, and then I, as the representative through the State Historic Preservation Office, are basically your point of contact for the program. What expenditures qualify? We have that question a lot. And we look at qualified capital costs, so hard costs, to determine if you meet the substantial rehabilitation test, the qualified rehabilitation expenditures test. So those are going to be plumbing, mechanical, electrical, anything that stays with the property. There are some site costs if you have to bring utilities from the curb to the building. Those will be capital costs. So anything you put on a long-term depreciation schedule, we use that to determine if you have sufficient costs to qualify for the program. Then later in the process, we take that qualified expenditure number and then we add in certain soft costs to calculate the actual amount that's available to you in credit. So there's two sets of numbers. We start with capital costs and work with that up till we get to the end of the process to get to the final certification process, and then we add some extra costs in. Things that you cannot claim would be personal property, anything that's not depreciable, or there will be some things in your project that you can elect to put on an accelerated depreciation schedule. So if you get an accelerated depreciation, then you cannot count it in your qualified costs, or if it's personal property, something that you would move, you can't qualify it. Now, there's some peculiarities in this, and it's really important that you work with a qualified tax consultant, because carpeting, which is something that almost every project has, may be either a qualified or a disqualified expenditure depending on how it's installed. So we have to be real careful about that. The big one here is building additions. If you expand the footprint of the building, either at grade or above, the expansion is not going to be an eligible expense. It'll be reviewed as part of the project, but you won't get the credits on it. If the construction stays within the confines of the existing building, then typically those are capital improvements that will qualify for the credit. So you have to be careful about that. The other thing, because the physical property, the grounds around your building are not depreciable, you can't take credits for most of your site work. Like I said, a utility line that comes into the building sometimes is, people think of it as site work, but it's a capital cost. All right, big change. We used to talk about the credits being available in the year that the building is returned to service. You would finish your project, you would get a certificate of occupancy, and then you would immediately be able to claim as much of the 20% credit as you could. In 2017, that changed, and while you still earn a credit that's based on 20% of your eligible expenses, you have to claim that credit over a 5-year period. So if you take 20% and you divide it by 5 years, you will hear people talk about, well, it's a 4% per year credit, which is not accurate, because then people start to think that it's only a 4% total credit, which isn't the case. You're taking 20% of a 20% credit each year for 5 years is a better way to think about it. So that keeps you focused on 20% of my total eligible expenses I get back in the form of a federal income tax credit. I take 20% of that total credit each year for 5 years. So this is actually a nice connection, because that directly connects with how I earn, or how the recapture period for the credit burns off, which we'll talk about a little bit later in the presentation. So how do we do this? We believe we have a certified historic structure. We believe we're going to have sufficient expenditures to make applying for the credit worthwhile. We believe we have a structure in place that will allow us to utilize the credits. So what do? Assuming the most normal path is that we don't have a building that's individually listed. We start, therefore, the process with the Part 1 application. The Part 1 application is intended to establish whether or not the building in question is a certified historic resource. So we're going to start with a discussion of the resource. We're going to describe its current physical condition, because all decisions are made based on current physical condition. We're going to ask that you prepare a statement of significance, which is an attempt to connect the significance of the building that we're talking about with the significance of the district and the community that the building is located in. It does require that you provide a location map, and I should point out that this is not a location map that you just pull up off of Google Maps. Because we're talking about a property that is presumably located in a National Register listed district, we actually need a copy of the National Register district map. So we can see the district, its configuration, its boundaries, and then an identifying mark within the district that shows where the property that you're looking at is. These maps, sometimes people have trouble getting them. They should be available from the National Archives, which is where the scanned copies of the National Register nominations for the whole country live. So Michigan's are there as well. If for some reason you can't find that, let me know. I can usually get copies of the maps. We have a fair number of them already scanned in our possession. But then if I don't have it, I can work with our National Register coordinator to get it and get it to you. You know, after 22 years, you start one place and you go through a whole iteration of differences. And then ironically, we've come back kind of full circle with the COVID outbreak. Photographs have become incredibly important once again. I am no longer able to visit every site that's looking for credits. I made a serious effort to try to do that in pre-COVID. But now photographs are really important again. And the photographs, it feels a little repetitive. We are going to take 3 groups of photographs, or potentially we're going to take 3 groups of photographs. The photographs really do need to cover the whole building. Think of them as a replacement for me ever making a site visit. And the Park Service staff is really never going to come to your site. It's very hard for them to get approval to travel. So those photographs take that place. So they need to explain the interior and the exterior of the building as completely as possible. They do need to be high quality, high resolution. The Park Service still asks that they be printed. And when they're printed, they have to be no smaller than 4x6. Some people have taken to printing 2 4x6 images on an 8.5x11 sheet, which is fine. They are supposed to be labeled with the name of the building, the date that the picture was taken, a number so that we can keep them in order, and a basic description of what's being shown in the image. If you submit standard 4x6 images, that should be printed on a label on the reverse of the photograph. If you opt for the 8.5x11 format, then you should print that information right underneath each image like a caption. Okay. Even in the age of COVID, we still need to get physical applications. So we do need a physical application form that has a wet signature. You manually have to sign it. The Park Service is not at this time set up to handle electronic signatures. We'll talk about actually submitting the requirements for submitting the paperwork in a little bit. So hold on to this right now. I want to cover what's involved in each of the separate segments of the application. There's a 30-day review period for the State Historic Preservation Office when we receive an application, and keep in mind that all of the the tax credits. All of the tax credit applications for projects in Michigan come through our office first and then are passed on to the National Park Service. So the SHPO has 30 days to review the application. We're going to first of all try to make sure it's complete. Second of all, we're going to try to make sure that it actually makes the cases that it needs to make. If there are questions or it's not complete or somehow it's not a compelling argument, we can and will ask for additional information, work with you to try to make sure that that application is complete, that it makes the most compelling case possible. If we have to do that, we will put the application review on hold while we get the rest of the information. So 30 days can be more than 30 days, but ideally we're working ahead of time, and that would be my first real important point about the whole tax credit process. I don't recommend that you try to do this on your own. It's best, especially if you're new to the program, to work with somebody that has experience. If you're going to try to do it alone, please contact me early and often. We need to keep this process as iterative as possible. I need to know ahead of time so that I can help you avoid pitfalls. Ideally, I've already seen your materials at least once before you submit the formal application, so that we've had the opportunity to avoid the pitfalls. And when it comes in, it's just a matter of my looking through it. Yep, it's all there. It's on the right form. Here's the photographs. They're all labeled correctly. I've got the maps I need. Great, I can send it on to the Park Service. The Park Service, once they receive your materials from the SHPO, has 30 days to do their review, and that's where we will get a formal response to the application. State Historic Preservation Office, while it's the point of contact for the program, doesn't have the authority to approve or deny anything. We are simply a clearinghouse. We help people through the process. The National Park Service, and specifically the Technical Preservation Services branch of the National Park Service in Washington, issues all the formal responses. So they work with the state and the National Register to validate that buildings are either eligible for listing or individually listed or contribute to the district. And then they will actually formally respond. In an ideal world, they sign and date the form, the first page of the form, and check the box that says the building appears to be either eligible for listing or is currently listed and a contributing resource. Send a copy back to the applicant, and we're good to go. Now, the program is technically set up to do part one, wait for an answer. Do part two, wait for an answer. Do part three, wait for an answer, and then claim the credit. Now, sometimes that's practical, and if it is, I encourage you to do it that way. In those instances where that's not practical, where we need to have part one and part two in the process at the same time, you can submit part one and part two concurrently. The issue with that is you're going to wind up submitting a substantially larger application, and technically you're doing all the part two work with no formal assurance that you're even going to be eligible to submit the application. There have been, although they are rare, a few instances where somebody submitted part one and part two together, and the Park Service came back and said, gee, I'm sorry, this building isn't a certified historic resource, so we're not even going to look at the part two. I will try to tell you that I think if that's what I think the Park Service would say, I will try to tell you that as early in the process as possible. But there have been a couple of times where, despite what we at the SHPO felt, the Park Service did come back and say that a building wasn't contributing or wasn't eligible. More than half the time we can resolve that and get it to move forward. There was one instance where we couldn't get everybody on board, and the applicant in the end just submitted their National Register nomination to the keeper directly, going, around technical preservation services. And ironically, they did get their application approved. So then we were able to go back and say, hey, Park Service, it's time to pick up that Part 2 application that you have sitting there, which you said you aren't going to review, because here's the letter that proves the building is eligible and now actually has been listed. So you need to finish the process. But either way, there are some characteristics that you're going to have to provide for the Part 2. Number one is the Park Service really looks for you to put written descriptions of all the work that you're going to do to and within the confines of the building on their form. And it's broken up. So you describe the current condition, supplement that with some photographic and drawn potentially documentation, and then you describe in words what you're going to, how you're going to do the work on that element. The Park Service looks at that as your primary project description, and that written description will supersede any drawn plans or written specifications that you submit. So if there's a conflict between what you wrote on your application form and what your plans and specifications say, the Park Service will say the written description prevails. So you need to make sure that when you're doing your written description, you are as accurate and complete and unambiguous as possible. There needs to be no conflict between the drawings and the work description. You do need to describe everything you're going to do, not just the things that you think are restoring or maintaining the historic character of the building. So they want to hear about all of your plumbing, all of your mechanical, all of your electrical, roof work, anything that you're doing to and within the confines of the building needs to be described, because all of those things have to be reviewed, and all of those things will be considered when we're making the determination, does the project maintain the historic character of the property? We also need an estimated rehabilitation cost. This does not have to be a perfect number, and it rarely is. It almost always is low, in my experience. But we have to have it. The Park Service will use that to do an eyeball assessment of whether it looks like you're meeting the substantial rehabilitation test. They will also use that estimated rehabilitation cost number to calculate the fee for reviewing the Part 2 application. There is no fee for reviewing Part 1. There is a fee for reviewing Part 2, and we'll actually talk about the calculation process a little bit later. The other thing that we have to have is estimated construction start and end dates. And that's really important because there's two time frames that are associated with tax credit projects. Normal or regular projects have 24 months or 2 years to aggregate costs and meet the substantial rehabilitation test. So if you think you really are going to get all your work done in 12 to 18 months, then, fine. Reflect that in your project description, reflect that in your start and end dates, and just be careful, because that means you're locked into a 24-month period. If, and I encourage projects to think about this as standard operating procedure as opposed to an exception, you want to talk about a phased project, then you get 60 months or 5 years to meet the adjusted basis test, to complete the work, and to return the building to service. And there's no penalty for finishing early in a 60-month project, but there is a potential penalty in finishing late if you're using a 24-month period. Because if you're using a 24-month project, if you go over by a significant amount of time, you will start to lose costs in the early part of the project. They will fall out because of the way we calculate the adjusted basis test. And so you can have trouble if your project really gets drawn out, meeting the adjusted basis test and qualifying for the credits. You cannot go back and amend the tax law says if the project was phased at the onset of construction and when you submitted your application, then it's phased. If it was not documented on your application as being phased, then it's a standard 24-month project. So what I like to encourage people to do is just break it up and say it's a phased project. Almost every project can be broken into 3 identifiable and reasonable phases. The first one being the exterior shell of the building, because if you don't have a building, you can't do the project. The second phase is typically some portion of the interior that's going to allow you to start generating some revenue so that you can afford to carry the project. And then the third phase would be typically the build out of the last portions of the building. So sometimes in a larger project, we'll do the exterior and residential space that we know we can build out fairly quickly. And then we'll hold the commercial space in a mixed use project for the last phase, which we know is going to take a little bit more time and energy to find an appropriate tenant and get their financing and get their plans together and that sort of thing. So be careful when you're talking about your project and establishing your starting and end dates and determining whether it's a phase project or not. It will have impacts later on. Photographs, and this is where some people decide to commit to submitting part 1 and part 2 at the same time. The photographs, if you do photos in part 1 and they're separate, and you may need to rephotograph some of the things for the part 2. The important thing in part 1 is that the photographs are overview, and in part 2, the photographs are of the specific work elements that you're going to do. So if you have some really good overviews and we understand, for example, that there's some plaster problems, then when you come to do the part 2, you're going to take pictures of those specific plaster problems and talk about what seems to be the problem and what seems to be the solution to that problem, how that's going to get handled. Brick masonry or masonry in general is another one where lots of times we have really good overview images in the part 1, but then when we get into the part 2, we have to have more detailed views of damage. In one, I had partial collapse of a wall where we had to have some really good documentation about, when did it collapse, how did it collapse, what are we going to be able to salvage from it, and that sort of thing. And again, please remember this covers everything. It's not just the things that you want to think about as restoring or maintaining the character. So plumbing, mechanical, electrical, roofs, all that stuff. Insulation, if there's going to be energy improvements, we need details of all of that. Again, the wet signature is important. The Park Service won't process the application without a manual signature on a form. And then it's the same 30 days, 30 for us, 30 for the Park Service. I usually say throw in 10 days in the middle for mail, because when we're dealing with paper, I have to have time to mail it to the Park Service. They have to have time to log it in and that sort of thing. So, oops, why didn't it go forward? Part 3 is really and truly the easiest part, and it doesn't come until the very end. Once you have completed the work that you put on your part 2 application, you've completed whatever work came up mid-project, because I haven't yet had a project that got everything exactly right the first time. There is a process that we can use to amend the work description, and it's fairly straightforward, but it involves actually sending the form, the amendment form with the supporting documentation to the State Historic Preservation Office and then on to the National Park Service to get whatever adjustments we have to make approved. But then in the end, the part 3 is the application form. It does need to include the tax identification information, so the name, address, and either a social security number or tax identification number of all of the parties that will be claiming the credit. Photographs of the completed work. There will be generally there will be overall views, but then there will typically also be some detailed views, particularly if there was component or a group of components that the Park Service asked a lot of questions about, or that are very important to maintaining the historic character of the building. And then again, you have to have a human signature. The photos do need to be keyed to some sort of plan, in every instance, some sort of plan for the building so that we can put them together in space. Doesn't have to be a super elaborate plan, but it does need to have all the basics. So you have to have doors, windows, walls, north arrow. It helps a lot when you indicate where the street and those things are, just to help orient in space. And then the photographic direction should typically include some arrow or indication of which way the photo is facing, and then the photograph number. It's helpful if the photographs in part 1, part 2, and part 3 are each taken from approximately the same vantage point, because it sounds sort of silly, but I really do sit down in the end with your before photos and your after photos and compare them. And because what we're trying to make sure is that we maintain the historic character and materials of the building. So take the before photograph and the after photograph and, you know, literally say, okay, this looks like we have historic windows, you know, we have historic masonry, we have, you know, blah, 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 whatever the characteristics are. And then I compare that. Oh, look, yep, they're all still there in the historic photograph. Or, well, this has changed, but I know that in the part 2, we talked about that change. So again, the photographs are very important. They need to be clear, printed well. You know, they need to capture each of the elements of the work that you did. Now, once upon a time, I said, you can't submit too many photographs. And then I had somebody submit 700 photographs for a 1,400 square foot bungalow. So I stopped saying that. You can submit too many photographs. So, you know, don't just think you have to photograph literally everything. But at the same time, submitting too many photographs can be as difficult to manage as submitting too few photographs. So if you have questions, if you're not sure, if you feel like maybe you're going overboard, let's talk about it. You know, it's important that we try to get it right. I don't want you to spend a bunch of money and then come back and say, well, there's way too many pictures here, sort of thing. So officially, the Park Service can do a site inspection, and officially the Park Service can ask me to do a site inspection when the part 3 is submitted. In 22 years, I don't believe that that's ever happened on an official basis. I have done some site inspections near the end of projects at the request of owners when they had final sort of detailing questions or that sort of thing. And like I said, in the beginning, I didn't do that. And then there was a happy period in the middle of my career where I was able to do that. And now we're kind of back into the not being able to do that until we get the current health crisis under control. So the last part is that the Park Service will request the review fee for the final review. It will be based on a percentage of the total qualified rehabilitation expenditures, so total QREs. And then again, the same 30-day review period for the state historic, for us, and then for the National Park Service. Important things to keep in mind here are that the Park Service will no longer accept old application forms. If you're familiar with the program, they used to kind of take whatever application form you happen to want to give to them. They will not do that anymore. The current form is 2016 revision 2, because there were actually mistakes on revision 1 that made it out into the public, and we didn't catch them until people started using the form. So you have to be using the 2016 version 2 form. You do need 2 sets of all materials. One set is for the State Historic Preservation Office. One set is for the National Park Service. The National Park Service still prefers to get all of their material as hard copy. So they need their forms printed and signed They need photographs printed. They need drawn documentation printed. Anything that you are submitting, they want a hard copy of. I prefer to get everything that you're submitting on a CD, a DVD, or a flash drive. And I know that that seems a little arcane, but because of security protocols, I can't, as a state employee using a state computer, access any of the normal public file sharing systems. If you happen to have a proprietary FTP site, I might be able to get to that, but not even, those don't always work. The safest way for me to get the information in a digital format is to have you submit it with the paper application, since you have to mail that anyway. Send me a DVD, a CD, or a flash drive. I do want all of the documents in PDF format. I don't want to be able to edit them. That's important. I don't want somebody to come back and say, well, you know, that's not the drawing I submitted. He was able to edit it. So PDFs are locked up and we can't edit them. And then images, we like to get JPEGs and TIFFs. And honestly, that's because we hope to be able to use your photographs to promote your project and the work that we do in the office. And if we get good, high res, appropriately sized JPEGs or TIFFs, then we can do that more easily. We don't have to come back to you and say, hey, can I get more more photos of your projects? Can I get them in this format? So that's why we ask for them in this particular format and on these media. You don't have to do this if it's just straight up easier and you want to do 2 hard copies of everything, that's fine. But it's easier for the office to deal with because we are running out of physical file space, and I can store a lot more CDs, DVDs, or flash drives in a file cabinet than I can total paper project files. We've talked about it, but we've had a rash of low quality, unlabeled, unkeyed photographs again lately. So this slide made it back into the presentation. The photos are extra work on the applicant's part, and I appreciate that. But they're so important. If they're not high quality, if they're not clear, you know, if they're not helping both myself and then Antonio, our reviewer in DC, understand the building as well as you do, as the people who are technically in and out of that building or could be in and out of that building every day. I mean, presumably you know the building the very best. And these are really designed to help us understand the building as well as you. It really is important that they be keyed to plans. I can't stress that enough. When we're looking through 100 photographs of a building that we've never physically seen, never actually walked through, and some of the images may be kind of repetitive. You know, if you have a multi-story building and you have multiple elevator lobbies, it gets confusing. So the keying things to the plans is really important. And it's super important. And I've had a rash of people thinking, well, I'm just doing exterior work, so I don't need to include interior photographs. The Park Service needs to see everything because that's all about establishing that the building retains character. So, you know, it's really important that those photographs be clear, comprehensive, and keyed. All right, let's talk about fees. Fees are based on qualified rehabilitation expenditures. They start out at 0 for a project that has less than $80,000 in fees. You can see the formula here. Then they cap out at $6,500. Now, what the Park Service is going to do is charge, ideally, they're trying to charge about half of the review fee at Part 2 and about half of the review fee at Part 3. If and this occasionally does happen, somebody decides that they'll lowball their Part 2 fee so that they pay the least amount for their Part 2, and then they'll let the Part 3 number be whatever it is. Yes, you can do that, but you keep in mind that you are going to get hit with a substantially larger fee when it comes to the Part 3 part. This is a completely different fee schedule. If you've done anything with the program in the past, please recognize that this is totally new. There used to be a chart and it was broken down by expenditure ranges, and they're not doing that anymore. It's just 15, the fixed 845 plus 15% of the QRE is up to $80,000. So it's easier in that respect. The Park Service is now, and this is one of the only things that they're doing electronically, which is kind of interesting. They will actually send an email to the applicant. So we collect the email addresses, and it's really important that we get those email addresses. It's really important that as the applicant, you keep an eye on your junk mail, because the fee request is a .gov do not reply. So it's notoriously thrown into the junk filters by applications, almost all applications out there, to be totally honest with you. So you have to watch that, because when they send you that email, they are expecting you to go to the pay.gov website and pay the review fee. They give you instructions on how to do that. They give you your access code on how to get in. They give you all the stuff you need to make sure you pay the correct fee to the correct account. But they also will not release the Part 2 application or the Part 3 application to the reviewer until that fee is paid. So if there's a delay in paying the fee, that will affect how long it takes for you to get a response back from the Park Service, because they're basically saying your Part 2 and Part 3 applications are not complete until your review fee is paid. So, it's important that the consultant, if you're using consultant, that your consultant and your owner are really paying attention. The way that you know that it's time to pay attention is that when we send our comments and your application on, we will notify that we've done that, and then there's usually a 3 to 5 day period before you'll get the request for the fee payment. So we send you the letter, say, hey, look, it's coming, start paying attention. Sometimes it works well, and sometimes they do get lost. And if you think you've gone too far, let me know, and I can reach out to the Park Service and make sure that they got the application, that they did send it. If they need to, they can resend it. So you will hear people talk about selling their credits. Okay. If somebody says, I sold my credits, don't trust them. Preferably say thank you and move on. You cannot sell credits. Federal credits accrue directly to the owner or owners of the property in proportion to their ownership interest. They're not a commodity. They can't be bought or sold. So if you hear somebody say that we use an investment partner for their tax credits, that means that they brought somebody in who had a substantial amount of cash equity that they were willing to contribute to the project in exchange for the credits at the tail end of the project. But that investor actually becomes an owner of the property. And depending on how the deal's structured, they could own 99% of the real property, even though they are not the operating member of the partnership. So syndication is a big deal. If you think your project is big enough to do that, then we need to talk again early, especially early, because the things that you're going to need to be able to go out and syndicate your credits are a little bit more complicated. It's very important that everybody keeps in mind, as we mentioned earlier, that the credits are now claimed over a 5-year period. It has affected the ability to syndicate because credits are not available in one lump sum like they used to be. So it's made the process a little bit more complicated. And it's important that everybody in the market is thinking that way, because there are still some folks out there that forget that they're prorated over 5 years. And at the end, there's my contact information. My direct number is, even though we're all working from home, my direct number is forwarded to me here. So, you know, please just, the 335-2727 is still the best phone number to get me. The email address is really the best way to communicate, because that gives me the most flexibility in how and when I'm able to respond. For those of, oh, see, I left off a new marker, darn it. For those of you who don't know, we have been moved yet again. We are now housed in the MEDC building, which is located at 300 North Washington Square in Lansing. We are affiliated with the Michigan Strategic Fund now, as opposed to where we used to be was the Michigan State Housing Development Authority. So new address, same great people, just different building. General information, there's our general office phone number. And if you have general preservation questions, you can always send them to preservation@michigan.gov. They will get routed to the appropriate staff person, and somebody will get back to you, but be a little patient, because that does take some time. The best website in the world, if you want to know about tax credits, is Technical Preservation Services Tax Incentives website. That is the definitive source for all information in tax credit. There's a ton of information there. I will tend to send you there first, and I will be honest and tell you that going to that website generally creates more questions that it answers, because there's so much information there. But at least when you contact me after being there, I'm answering your direct questions and not trying to answer general questions that you may or may not already feel like you're comfortable with. We do have information on our own website, the michigan.gov/SHPO will get you there. And we also have direct access to a little bit of tax credit information at HP Credit. So I'd like to thank everybody for being here. I know that's a lot to go through. We have plenty of time for questions. So I'm gonna, I think, stop sharing, Mallory, and then we're gonna go to you. And
Yeah, yes.
Is that how we're doing that?
Yeah, you can leave your PowerPoint up, or you can
Okay.
stop screen share, whichever you prefer. We have had some questions come in that are just general, so feel free to keep typing those questions into the Q&A. If you have a question that ends up being a little bit more complicated, because we have so much time, if you feel comfortable, we can unmute you and you can have a direct conversation with Rob. Just know this is being recorded, and so your conversation will be in the recording that goes on our YouTube channel. So if that's something you're interested in, we can look at that. So, but I'll start reading out some of these questions, Rob. So we had a question: my property is not currently listed in the National Register. I think it is eligible. Can I apply? I assume apply for the National Register and start work while I also, apply for the tax credit and start work while I also work to get the property listed?
Actually, that's a really good question. And unfortunately, the answer is yes and no. If you are working with a property that is not currently listed, but you think is eligible, we can start the process. And what we'll be doing is called a preliminary determination for listing, PDIL. What happens is I have to have a draft National Register nomination to attach to your Part 1 application. So what typically happens is that you work with both Todd Walsh, our National Register coordinator, and with me to get that draft nomination to a point where Todd says, yep, I agree, it's eligible. And then we sort of put the National Register process on hold for a minute. We go through the tax credit application review, Part 1 and Part 2. And then the funny thing is, I like to say, and when we get those approved and you get into construction and things calm down a little bit, then you go back and you pick up the National Register process. with the goal of having the National Register listing complete before the project is finished and receive its Part 3 certification. Because if the National Register nomination listing isn't finished, the Park Service won't certify your Part 3. They used to do that, but they don't anymore. They will hold off on your Part 3 until we can prove that it's listed, and then they will issue your Part 3. So it does happen. It's just a little bit more complicated, and it involves a little bit more coordination. And it's, again, I say this over and over again, it's super important that you contact me early if that's the way you want to go, because there's some pretty big pitfalls, and we just want to make sure we don't step in any of them.
Okay, thank you. Now, Rob, during your response, I have a question that popped up that may complicate it or it may clarify, because there is also the preliminary questionnaire for the National Register. So does
And
it have to be an actual draft, or does the preliminary?
it has to be an actual draft. You
Okay.
will ultimately do the preliminary questionnaire to kick off the National Register process. But you have to keep in mind, in the scenario that's described here, we are running 2 independent processes in parallel.
Sure.
Okay, so it's 2 people, 1 property, 1 applicant, 2 applications that
Sure.
move forward, and they start and stop, and while they're moving on parallel tracks, they don't actually come together until the very end, when
Until
everything is approved and the credit is finalized.
So it still would have to go through the preliminary questionnaire and then get to that draft before you can start that Part 1.
Not before you can start it, but before I can submit it.
Submit it. Okay.
Yeah.
Okay. All right. Thank you. A question came in. Why was the credit changed from upfront to 4% over 5 years?
Official answer, I honestly don't know, because I wasn't involved in the decision-making process. So there's the official answer. Now, if you'll bear with me, as a government employee, I will speculate a little bit. And it's typically the proration is a way for the Treasury or the Department of Revenue, whichever you're dealing with, to manage the impacts of very large credits. So if you think about it, and you have, and this is nationally, and I have 40 or 50 people who have a $10 million tax credit, that means I have 40 or 50 million dollars in income that I'm not going to get, and it's all going to hit me in 1 year. It's harder for me to plan for my budgeting. Now, if I know that I'm going to take 40 or 50 million dollars at $1 million a year for 5 years, that's a substantially different impact. So this is a discussion that's had, and was had frequently when we had a state credit. How do we manage? We don't want to eliminate the credit, but we need to manage the impact that has on the budget. And so that's my take on why it went to the 5-year prorated. Gosh, it would be fantastic if that could be undone, but there doesn't seem to be either the appetite or the will to do that right now.
Sure.
So
Oh, go ahead.
Less than ideal, but better than no program at all.
Right. Because this was during help me. I mean, so much has happened. This was back when they were like redoing the taxes, right?
Yes, 2017 and the Trump administration's huge push to streamline the tax process. They will tell you to make it more predictable and reliable. So.
Yeah. Thank you. Question: are storm windows considered an eligible?
Yes.
They're not considered window covering, correct?
No, that's a good question. Window coverings are typically the things that go on the inside of your building that you will take with you. Storm windows are custom built to fit onto the building, you know. So normally people will not take those with them when they move.
Sure.
And that's sort of the test of what's personal and what's capital or real property.
All right. So I'm thinking now that of storm windows, the exterior ones, but now they have like the interior fitted ones that are a little bit easier. Those would also be considered.
Generally, those, yes, but that's one of those things where the applicant may have the opportunity to put them on a different depreciation schedule. So if they do them and they decide to put them on their long-term depreciation, great. But because of some of the energy credits, they may be able to use a different depreciation schedule. So they have to look at that carefully. That would also be an example of where they might combine an energy credit with a historic credit. And that would be legit because they're meeting the qualifications for both programs. They're improving their energy efficiency and they're maintaining historic building. So, they can do that. Well, there's one that just came up that I'm seeing. Technically, wallpaper is, and this is weird, but it's personal property.
Okay. So the question was, what about interior wallpaper replacement? And that is personal property.
I don't understand that one at all. I don't get it.
So is that paint then too? Is paint personal property?
No. It's the IRS. Come on.
Okay. All right.
Don't ask me why they make the rules that way. I don't know.
All right. So we had a question come. So if you're looking at wall coverings, paint is include. And the word is escape me. Can be included, but
yes.
Wallpaper cannot. Interesting.
As far as I know, yes, that's correct.
All right. Are there any real project examples on the website of federal tax credit projects? I'm assuming that's what the question is.
No, there are no sample applications on the website. Go ahead.
Oh, I was going to say, I think I think that's a good question if there's any sample applications, but I think their question was, are there any real project examples? So a successful federal tax credit project that they could look at.
Yes, each year the Park Service puts out an annual report, and in that annual report, they highlight typically 3 to 5 successful projects, and those annual reports are available. The most current one is available online, and then I believe that the earlier versions are actually in the publications portion of their website.
Yeah, that reminds me, the annual reports just came out. So MHPN and the SHPO social media outlets did promote that. So that's one place to find those links. And I have made myself a note that I will include those in the follow-up email as well, because it's really important information.
Yep, absolutely. And if you can't find examples, we do have some case studies, or we used to have some case studies on our website. Now that we're in a different organization, I don't know for sure that they're there, but if you contact me, I can give you some of those quietly, because they have the wrong agency's name on them, and I wouldn't want to promote the wrong people somehow.
Sure. But you were saying that you don't have examples of an application, correct? That is not something that we have.
We do not. I have tried to put one together, and it becomes very difficult because either I have to put together a huge application that doesn't make sense to a small applicant, or I put together a small application which is misleading for a large applicant. And so I've had some trouble finding the way to do that didn't create confusion for everybody.
Sure. Yeah.
So I have lots of applications, and within cautious parameters, we can share some of those, but we wind up having to redact a bunch of stuff because there is some proprietary information in there too.
Sure. What type of site work can be included as a QRE?
As far as I know, the only site work that can be included as QREs are utility services from a pole to the building or from the sewer line to the building. As far as I know, there are no other depreciable exterior costs. Well, yes, that's true.
So like landscaping, paving, not.
To the best of my knowledge, paving, landscape, site furniture, none of those are considered capital costs because they're not, at least not by the IRS, because they're not depreciable. You can't depreciate site work.
Okay. Could equipment costs for DIY repairs be eligible? For example, the cost of an extruder machine and a kiln to make custom terracotta replacement blocks, cost of scaffolding, and then are DIY costs eligible, or are costs only applicable if paid to general contractors?
Officially, that's an accounting question. I'm not an accountant. I'm not supposed to answer it. That said, if at least some of those costs will be qualified expenses, because some of those costs will meet, you'll hear the legalese, it's the but-for test. You would not have incurred those costs but for the project. Some of those you should be able to claim. You can't, unless you do construction for a living and bill yourself an hourly rate, you cannot claim your time as costs. So you should be able to claim your materials as costs, but not your time as costs. Does that make sense?
I think so. If the individual who asked wants further clarification, please feel free to type anything into the Q&A. And Rob, they said that makes sense. So
good.
Thank you.
Oh, good.
Excellent. It's nice to know when we can clarify things.
Success.
Rob, your question or your comment about accountant, that's a question for an accountant. As I'm listening to this presentation, I'm thinking of what are the team members that one should identify or have in their in the circle as they're starting to put something like this together.
Okay. In an ideal world, you have to, first of all, you have to have an accountant who understands this particular portion of the tax code. It is a specialty gig, okay? It's not always easy for, your average accountant who are well qualified, and don't get me wrong, but there's subtleties in this program. If they're not used to dealing with them, you may not want to pay them to learn them on your dime. Most projects will need some sort of legal help. And again, general counsel is great, but you want somebody on the legal side that understands this particular nuanced field of law. So it's really good to have that. A professional consultant, if this is your first time, whether they are an architect who does this on a regular basis, or whether they are a preservation consultant that's going to help you and your architect through the process. Again, there's a lot of subtleties in here, and we use language very specifically, and sometimes that language doesn't translate across user groups very well. So frequently having that preservation savvy consultant is a good thing. And then the last one, which ironically doesn't get talked about enough, is you need to have a contractor who's done this before. I don't like doom and gloom stories, but I will tell you about the contractor that put a developer out of business. because halfway through the project, they decided that they could save the contractor $300,000 in windows by changing the windows that had been ordered. So they changed the windows, they got the new windows, they installed the new windows, and then the windows were wrong. And they cost the developer $1.2 million in tax credits because the finished product could not be approved without replacing all the windows. So needless to say, I didn't ever hear from that developer again. But contractors have to understand that this is a different process, and they are going to encounter things where in other projects, they might just make a unilateral decision. But they cannot do that in this case. They have to communicate with the owner and the design professional and the State Historic Preservation Office to make sure we're all on the same page and we're not risking loss of a credit, because the credit is binary. You either get it or you don't. There's no middle ground. And so, we have to manage change in a very different way than lots of contractors are used to.
Right. I think that's helpful, in first steps in exploring, right? Reach out to you early to talk about a potential project, and then identifying those individuals who you can lean on for their expertise to help move that project forward with as few hiccups as possible. Thank you. Is there a rough rule of thumb cost of repairs or renovations below which it typically doesn't make sense to bother going after the tax credit?
Well, no, technically there's not. Things to keep in mind. Okay. Number one, you're going to pay a review fee. The more you have in expenses, the more substantial that fee is going to be. It doesn't make any sense to apply for a credit where the value of the credit is less than or equal to the cost of what you're going to pay for the review. I mean, that's just, why would I bother? The thing to keep in mind is that as the amount of qualified expenditures is reduced, the more it becomes a credit that the owner of the property has to be able to use themselves. When I throw off a really large credit, then I have the potential to syndicate. And I have a potential to syndicate in the national level. When I throw off a medium-sized credit, I have the potential to syndicate in the state or in a regional market. And then as I get to the small credit end, I really have to either be able to use it myself, or I have to have direct connection to an investor who's willing to partner with me, just the two of us, and use the credit and exchange for some capital to put into the project. If you have a question, if you feel like you're getting to the small end, again, call me. We'll walk through and we'll talk through. The other thing you have to be really, really careful about is, unless you make your money developing real estate, the income that comes from that real estate will be considered passive. Therefore, your tax credit will be considered a passive tax credit, and it can only be applied to your passive annual income. So if I have a full-time job, I have active income, and then I have a real estate business, or I rent, commercial properties on the side, and I do a tax credit project, I won't be able to apply the credit to my active income. I will only be able to apply it to my passive income. So I have to look at those things really carefully and make sure that I got a phone call, very upset, owner, did the project, had $35,000 in tax credits that they could claim $500 a year worth. Well, I want to avoid that. I need you to talk to your tax people and make sure that this is really a viable thing for you from your business perspective. I can point out some things, but I can't make that decision.
Sure. So maybe that's a team member or an early contact, right? With
Absolutely.
someone, you're a tax professional, so you can understand how this tax credit would impact your what you are able to take and
You're
utilize.
very dependent on everybody's specific tax circumstances.
Right. We all have very different experiences come tax season. Okay. Well, we are coming to the end. If you have a question, please feel free to type something in. But since it feels like we are wrapping up a bit, Rob, do you have any closing thoughts or any like big takeaways that you want participants to leave today with?
If you early contact, I think I probably said that 24 times at this point. If you have questions, ask. This is not a program. Guessing is not a good thing. Making assumptions is not a good thing. We need to make sure that we understand your fact pattern, your tax environment, your building, your proposed end use. This is an earned credit, and it's available for any project that meets the criteria for the program, and we want it to be available. That doesn't necessarily mean it makes sense for everybody. And so the earlier we have those conversations, the earlier we can hone in on, is this valuable and viable, or is this going to force you to do things that you're unwilling or unable to do? And is it going to somehow alter fundamentally your goals? I don't want to do that, and I certainly don't want to get into the design review process and then all of a sudden run up to this major immovable hurdle. So
right. And as you learn more about the program, you can identify maybe potential projects that really could use the federal tax credit and like really
absolutely
benefit everybody involved in that project.
And I have had situations where somebody showed up with their first project, and no, it wasn't a good match for the program, but after that they adjusted their model a little bit. Actually, I have a developer in Flint, that's exactly what happened. And we missed out on their first project, and I think I've done 5 or 6 with them now after a minor adjustment in their business model.
Yeah.
So
it's an exciting program. It is very overwhelming. But if we put the right team together, you get the right information from Rob, it's really helpful, and it does really leverage investment and helps increase economic impact in communities. That annual report that Rob mentioned from the federal tax credit, which I'll share out, and if you're on social media, again, SHPO has been sharing some of the great projects that have gone forward with the federal historic tax credit. So as an aside, we're still working on the state credit.
Please help them work on the state credit.
We're still working on it. So if do keep an eye on our social media, our www.miimpact.com is our website that tracks that. We still are working on trying to get it passed this year. So that advocacy push is going to come hard and fast, and we're going to have to be ready for it. So stay tuned. And I think, Rob, if you don't have anything else that you want to say, I think we can wrap up. His contact information is still on the screen, so I hope you have taken a moment to write that down. And thank you all for attending. Thank you to our generous sponsors for allowing these webinar series to occur. We will be processing this recording. All of the recordings from our webinars have been stored on our YouTube page and are accessible at your convenience. So if you know someone who wasn't able to join us live today, send them to YouTube, and it's available whenever they want to take a look. So Thank you so much for your time today, Rob. We really
And
appreciate it. You're a busy gentleman.
I'm happy to do it. Thank you for the opportunity to do it. I really do appreciate it.
Yeah, excellent. Well, thank you all for joining us on this Monday afternoon, and we hope you have a wonderful holiday week. And we'll see you at our next webinar, December 10th, where we'll be doing a virtual barn school with the Michigan oh my goodness, Michigan Barn Preservation Network.
There you go.
Really looking forward to that. So thank you all and have a wonderful day. Thanks again, Rob.
You're welcome. Thank you.